I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a return guest. Haven't had him on in a while, and I've had a note on my desk to have him on for a long time. He wrote this book, and this is a fantastic book about silver. And yes, silver is the most underpriced asset on the planet, according to my friend Gregory Manarino and plenty of other people. He also wrote this book just a few years back called Second Chance. He's talking about second chance to get into some precious metals. I'm talking about David Morgan of the Morgan Report, the morganreport.com. David Morgan, thanks for joining us today on USAWatchdog.com.
Well, Greg, I always look forward to your interviews. Thank you.
Well, I just want to have you on because because the price of, and not because things are going great, because things aren't going great, but that might be a good sign. Silver's in the $14 range and change. Gold's around $1,200. I was talking to my friend Bo Pony, who said, the funny thing about it is they can't push it down and they can't let it go up, but they can't push it down. What do you think about them not pushing it down? We had a big dump on the markets just last week. What's your appraisal of what's going on in the markets? The phony, fabricated, naked short selling COMEX and LBMA.
Right. Well, I think what you're referencing is probably more true about gold and silver. I mean, they certainly pushed silver down quite substantially. But as far as gold, it's pretty hard to get it below 1,200. And what we saw last week was that 10,000 December gold futures contracts were sold in 1 minute. And that's 100 ounces per contract. So you're looking at $1.2 billion in notional value of precious metals. That's about 30 times the 100-day average at the time. So this is 30 times normal activity. Not only that, but as many have said, no real investor would off that many contracts at once without the express purpose of trying to drive the price down. Now, to be fair and look at the other side of the coin, Greg, I would say it's possible that it was a hedge fund that got a margin call. But even if they got a margin call and they had to meet the margin by selling their contracts, any broker in their right mind wouldn't off them all at one time in 1 minute. They would put them into the market over time and try to get the highest price possible to meet the margin call. So this is what's going on in the gold market. We've seen it time and time again in both the gold and the silver market, where these outrageously large positions are on the sell side, and of course they force the price down.
Well, and who would do that? Who would do that unless you're trying to lose money? I mean, I thought when you're investing and you're in the market, you're trying to make money.
Yeah.
I mean, what you're saying is they intentionally dumped everything on the market so they would lock in and guarantee themselves a declining price. Is that what they're telling you?
Well, there's two sides of the market, obviously. So the people that are short and see the price come down, they're making money at the same time. The commodities market is a zero-sum game. For everybody that wins, there's a loser. So the futures market's basically 99% of the people lose. It's the pros that make money again and again and again. The general public should really stay far, far, far away from it. And most of the trading funds lose against the commercial interest. So it's pretty much a rigged game. I go through that in the Silver Manifesto. I go through the Sharpe's ratio, which I think we talked about the last time I was on. I don't want to go into it right now. People that are really interested in how this market manipulation is taking place, and learn about it and have the facts to back up it's not even a supposition, but you could say it's a supposition about the manipulation, should take a look at the book and we go through it. I mean, there's just so many ways to prove that this is not a random walk, not a free market, not free, not fair.
Maybe we should just send that to the CFTC. I mean,
I've often said that if I was ever asked to be an expert witness during a hearing on manipulation or not, I'd certainly use my own work and work of others that's in that book to prove beyond a shadow of a doubt that this is not a free market.
Well, let me come back to this though. Here's that you talk about a huge dump in 1 minute, a huge dump onto the market, and yet they can only get the thing to go down $10, $8, and
right,
now it's
so
back.
So
let's talk about that. About how 5 years ago, if they did that, what would have happened to the market, and what happened to it now?
Yeah, this is a very important point. So if you go back a few years, if you sold that much in 1 minute, you would have a remarkable effect on the market and wouldn't bounce back. It would usually start a waterfall decline, which means you get, let's say, the $10, but then the next day it ought to be off another 8, and the day after you can be off another 6, and sort of bing, bing, bing. I mean, have a massively greater effect. So they're running out of ammunition as far as I can tell, which means when they do these, we'll call them massive sell-offs, they're being less and less effective. So they got to use more and more power to get less and less result, which if you look at it and try to be objective, and I do, it's saying that they're running out of ammunition. It's taking a whole lot of work to get the price down a fair amount. It bounces right back, which shows the resilience in the gold market. So from the gold perspective, I think, what you stated at the beginning of this interview is pretty correct. They can, try to push it down, but they're not having much luck, but they're not going to let it run to the upside either. And that's, this control mechanism they have to basically say, dollar good, gold bad.
Well, the silver's not going much below 14 either. I mean, I've watched it, and it just looks like it's pretty much they can't drive it down. Isn't 1,200 gold and $14 silver? Aren't those the numbers for average mining cost of those metals and producing, smelting, and deliver? The whole deal. They put them into a coin or a bar. Isn't that the average cost? 14 on silver, around 1,200 on gold.
Yeah, as a rule of thumb, it's pretty close to both those numbers for both the metals. I mean, there's exceptions. There's, certain mines that have the ability to mine at a lower cost, but there's many that are above that cost. So, again, rule of thumb, that's basically close to the production cost of the major mines for gold and close to the production cost of the major silver producers.
That's around 14 for silver,
mm-hmm.
and around $1,200 an ounce for gold at this point.
That's correct.
Wow. Well, what does that tell you about the market?
Well, it tells me that you can't get it much lower for very long. I mean, the thing about silver is 70% is a byproduct metal. So you could put every silver miner out of business and still mine copper, lead, zinc, and gold and still bring up 70% of the world silver supply. I'm not suggesting that's going to happen, but I'm saying that silver is less sensitive as far as putting miners out of business than gold. There's gold is gold mining. I mean, it's really not a byproduct of other mining like silver is.
Well, what does that tell you about where are we with the markets here? Are we? Is there a long way to go down? Are we at a bottom? Do you think, or do you think there's a lot longer way to go down? What's your appraisal of what it is right now? They're just kind of frozen, sticking in this really narrow range in the 14 and change and the 1,200 plus or minus. What does that tell you about the market? What do you think?
Well, two things. One, the fundamental thing that most people overlook. There's an article by Simon Constable for Forbes, and he talked about central banks being massive buyers of gold over the last decade. And he also went further to say that it's not just buying gold because it's part of the monetary system, which it's not since we left gold August 15th, 1971 under Nixon. They're buying it because of fear. They're fear driven. This is what his article says, not me. I agree with him. But he says it's fear of what's going to happen to the U.S. dollar. That's why central banks are buying gold. So that's a fundamental fact. On where are we technically, I'd say, yeah, we're near a bottom right now. I hate to call it bottom and be wrong, but we had the bottom at the end of 2015, and the level that gold's at now is a higher low, and the level that silver is at right now is a higher low. And I do believe that we are still moving higher over the short, medium to short term and long term, certainly higher. Whether or not this is it or not remains to be determined. I think by the end of the year we'll be certain that this is the low, but time will tell. I'm too gun shy to say this is absolutely it. But we got a nice rally in silver this morning, and
Tuesday morning.
And the last point, I'm sorry, it's all in my head, is what we see on the commitment of traders, which I go over with my paid members all the time. And the commitment of traders looked extremely bullish, but we saw this extremely bullish case in April, and we got a pretty nice rally, and I was ready to go at such a high price compared to where we are now, and that was back in April. It did not fit what I call the Morgan rule for me to go ahead and enter a position, but nonetheless, once it hit that, it came back to this new low level. So we're in a very similar, actually even better setup for what could potentially be a short squeeze. But the last time it looked almost as good. It rallied, but not that significantly. So time will tell. I'm not all that jumping up and down, that the commitment of traders looks so unbelievably good that it's inevitable that this is it. I'm not going to say that at all. We'll have to wait and see.
Well, but what's the Morgan rule? You said it doesn't fit into the Morgan rule. So
well, that's for my paid people. Basically, I put a level on, and it has to go above that level, stay above that level for 3 days in a row, and it has to be on above average volume. And if that takes place, then we go ahead and enter that position. And if we enter that position, you have about an 85% probability that you're right, not 100%. But it saves a lot of whipsawing or being wrong or getting in too early and that type of thing. Sometimes you miss part of the move. But if silver's going to go from 15 to 50, if you miss 50 cents on the move or even $1, are you really going to care? And the answer is, of course, not.
Just be careful about tapping on your desk there. There's a little.
That's sorry. Thank you.
Yeah. Sorry. I don't want to stop and edit this and whatever. That's okay. Because that way we can identify what the hell is that, and that that's what it is. That's what the heck it is. So all right, it's okay. It's fine. I'm not scolding you. I just want to hear you. And I want to talk about. I want to get in a little geopolitical here because listen. Martin Armstrong famously said that people don't buy gold and silver for inflation. They buy it because they don't trust government. They don't trust what government's going to do. And, there's this executive order blocking the rights of property. We talked about this in the pre-interview. And it said here that in this order, December 21st, 2017, there's been other subsequent orders talking about the same thing, about a national emergency to protect the financial system of the United States, a national emergency to deal with that threat. We're under a national emergency. And the press, you'd think they would read whitehouse.gov.
Yeah.
Right?
Right.
But they don't, and they'd ask, Sarah Sanders some legitimate questions about what's up with this national emergency you're putting all over the internet. And anyway, but what do you think about the? Listen, they're warning that we are in a national emergency. The president is warning on WhiteHouse.gov that these people that he's trying to protect the financial system. In other words, they would crash it. What do you think about gold and silver in that scenario if the evildoers are able to crash the system or do some damage?
Well, firstly, anyone that's in my peer group would tell you that you want physical metals for such an event. Basically, when you go back to the financial crisis of 2008, there were a lot of Wall Streeters that were going to their ATM to get physical cash. This is the two things you would need the most in that type of scenario would be physical paper, bills, and gold and silver. On the other hand, looking a little bit deeper, if you look at the potential reaction by the deep state, these people do not lose gracefully. If you know what they're doing, and you've gone with others that have talked about it, Dave Jander and several others, these people will stop at absolutely nothing. So you have to factor that into your thinking, which means that they could certainly take down the financial system because they're losing the game. In other words, turn over the card table as a metaphor. And if that were the case, what do? Well, I think the possibility, and I say again, possibility exists, that perhaps someone in the White House could usurp the illegal act of 1913 in December, where the Congress gave up its constitutional duty to coin money and turn it over to a private banking cartel called the Federal Reserve System that's basically not federal, has no reserves, and is run by people that are primarily not friendly to the United States of America.
Amen to that, brother.
So what if there was the possibility that the Treasury took over printing United States notes instead of Federal Reserve notes? And this is somewhat far-fetched, but you're asking a question. I want people to think outside the box. I have most of my life. Take it back. In other words, let's say it closes, and then it reopens, and it reopens with a new printing press, because everything is printed at the Treasury. I have had people argue with me, well, David, you don't know what you're talking about. I've been to Washington, D.C. and been to the Treasury. Well, I have too. But what happens?
It's the Bureau of Engraving and Printing. You're absolutely correct, sir.
Yeah, well,
I've been there.
Printing is done by the Treasury for the Federal Reserve. The Federal Reserve buys them at about 3-4 cents a note, regardless if it says 1, 5, 10, 50, or 100 on them. They buy it for about 4 cents each. They loan them to the United States government, corporate version, at face value plus interest. Not a bad job if you can get it. So what if the Treasury took over that responsibility? They're printing it anyway. You took off the top that said Federal Reserve note and it said U.S. Treasury note. And you
save a lot of money, wouldn't you?
Save a lot of money. Now, let's go a little bit further here. And let's, David doesn't know what he's talking about. Well, this has been tried. I mean, it happened under Abraham Lincoln with the greenback, and boom, he was shot. John F. Kennedy, under Executive Order 1110, did the same thing, and he ended up dead. So I'm not saying it's something that's taken lightly. I mean, these banksters will stop at zero. I mean, if it means killing somebody, ho hum, big deal as part of doing business. At least that's been the monetary past, in the last few hundred years. So I'm not saying it's going to happen. I'm just throwing it out as a possibility because
it could happen. Hey, listen, it could happen.
Well, you got to outthink these people. You got to be 2 or 3 moves ahead of them. So if they're going to turn over the table, you got to be prepared for what do you do before they turn over the table, or what do you do after they turn over the table. So we're in a state of emergency, and I only bring this up because you brought it up.
Yeah.
What's my thinking on it? Well, this is an emergency situation. You could say it's a temporary situation where the Treasury is taking over the printing of the money. But still backed by the full faith and credit of the United States citizenry, which is what the what the Federal Reserve holds as collateral anyway. And then away you go. So again, it's something to think about. I don't want to get too far down this rabbit hole because I'm sure.
Well, listen, we're just
tons of comments, but it's something you must think about. Look, we need a reset. We need a new monetary system, and we need money to work differently than it's working now. If we keep the system and there's a reset and the bankers stay on top of the game again, regardless of how they do it, we've really gained nothing. And psychologically, most people will be, begging for a new system. Just let the thing, let my life get better again. Let's get cash flow going again. And they'll accept something that really isn't in their best interest. If we're going to change it, we need to change it for the better.
Well, we are under an emergency situation. Watch the desk. We are under an emergency situation. That is a fact. And it is from evil people, criminal cartel. He didn't name who they were. But that's a fact. That is a fact. That is a fact that's been repeated several times, that we're under an emergency situation. So what you're talking about is not so far-fetched. And don't we have dimes, nickels, pennies, quarters, and Sakakawea dollars? Don't we have treasury?
That's an interesting point. Yeah, that is a really interesting point. I mean, we
do have treasury instrument. Coinage is
basically, if everyone turned in their credit, their bank account, and then demanded coinage, that does come from the treasury. So it's just a little bitty slice of what the monetary system involves. But basically, if we did go to coins, and those are treasury produced.
Yes, they are.
You could wipe out the Fed. I mean, this is really far-fetched, but in theory, you could do it. Yeah.
Well, you might come into a situation where a quarter U.S. dollar is worth more than $100 Federal Reserve note.
Who knows? I mean, things are changing so rapidly worldwide in so many areas, that it's very difficult to keep up with things. I mean, I used to be able to, look at something maybe every couple of days and stay pretty much abreast. I mean, I have to be on the net longer than ever because things are changing so rapidly, not only in the financial space, but, everywhere else, war-wise, geopolitically, leaders, what's going on in the emerging markets, how things are interacting, what's going on with these, the China situation, this trade wars and everything else. I mean, there's a lot going on right now. It seems to me the whole system's accelerating.
But here's a fact, and the fact is we're in an emergency situation.
Yeah, that's right.
That is a fact that has been said over and over again. You can see it for yourself on whitehouse.gov and multiple executive orders. And when you take a look at, we are in an emergency situation according to the White House, then how would you frame your gold and silver and your plan?
Well, I think you need to obviously plan for an emergency. No one knows the exact details of it, but you have to go and prioritize what that means to you, depending on where you live, what your income level is, what your debt basis is, and all these factors. So, I mean, for a lot of people, that might just mean, in hurricane country, having some food and water. If you have financial assets that need to be protected and you're at that level, then obviously you need to hedge, which means physical precious metals. And usually 10% is probably sufficient for most people. I want to go back and digress a bit, Greg. I did an article. It's actually a video. You can look it up. Myths in the silver market. And I talked about one of my real pet peeves is that most of these coin dealers, anyone across the board basically will tell you the same thing, quote unquote, everyone should own a little. And so I went through that and talked about it. And so everyone owns a little silver. Well, if everyone in the United States of America owned a little silver, which is 2 ounces, we're talking about $30. I think that's a small amount relative to most people. If everyone in the U.S. owned a little silver, then that would wipe out the entire annual mining supply. And remember, the U.S. is 5% of the world's population. So it's absolutely, totally, and completely impossible for everyone to own a little. That shows you one thing and one thing only, how precious the precious metals really are. Because relative to all other asset classes, they are minuscule.
Well, that's a very good point. Also, one thing you were telling in the pre-interview about you called around some of your sources. One of them was a big-time coin dealer, and he had a pretty interesting thing to tell you about buybacks as opposed to selling. Tell me about that.
Yeah, this has been a friend of mine for years, and I am friendly with many of the retail dealers and some of the wholesalers. But he said recently, because he did a survey before the interview, that he had in 13 years a couple of months where he had more buybacks than he had sells. In other words, more people were selling back to him, his business, than were buying. He says that's never happened in 13 years, and it was, pretty much near this bottom. So anyone that knows anything about markets, this looks like it reeks of capitulation. People are just giving up. And usually, the cure for low prices is low prices. So when people give up, this is usually a pretty good indicator that this is it. So we could be very, very close to the bottom in these metals markets.
But you're not seeing the, you've heard that J.P. Morgan Chase has a huge hoard of physical silver. China is buying. I think Russia just recently added a ton of, tons of gold to their, I think 30-something tons, which is a lot for Russia. A lot of these countries are not selling, they're buying. I mean, this
China. Yeah. Oh, China went, I forget the year, but several years ago from exporting 100 million ounces of silver on an annual basis to importing about that much. China holds a lot of keys to the silver market. Basically, the Shanghai Futures Exchange actually did more transactions in 2013, 14, and 15 than they did on the COMEX. That's something most people don't know. Also, now that's changed over from 2016 to present. Also, they do most of the photovoltaics for the world, and the solar panels continues to grow worldwide. They also are going to increase their use in electronics because they're population based, getting more gizmos and gadgets. If you go back and look at some of the earlier silver studies, you'll find that what is the per capita use of silver in the Western countries. And believe it or not, it's about 1/10 of an ounce per household, which means a quarter of that much per person in the United States, which doesn't sound like a lot when you realize how small the silver market is. It's actually substantial times, 350 billion people.
It's 7 billion, right? It's not 350 billion.
No, I'm talking million. Just in the U.S.
350 million.
Yeah, I was wanting to finish my thought.
I know, but you said 350 billion, not 350 million.
Oh, billion.
I'm sorry. There you go. I just want to make sure that people.
I'm
sorry. Finish your thought, but it's 350 million
people. So that's
people.
5%, 350 million in the United States. So that's 5% of the population. So let's say that everyone was westernized to the same amount as the United States. So that would increase it by 20 times. So if everyone in, India, China, Indonesia, Africa had the same consumption rate for silver in, these gizmos and gadgets like pads and cell phones and computer screens and washing machines and microwave ovens and on it goes, that would just definitely cause a big disruption in the silver market, which brings me to the next point, Greg, because I've been thinking about this interview for a couple of days that you called me and said you wanted to interview me. I think what will happen in this market is you're going to get what I call a natural corner. Now, people have talked about cornering the silver market for years, ever since the Hunt brothers, which really they didn't try to corner the market, but I don't have time to go into that. But a natural corner is when there's enough investment demand that all of a sudden the entities that need silver, which, by the way, if we talk, and I'm going to digress a moment here, but we talk about the Silver Users Association. What other commodity on the planet, Greg, has a reverse cartel or a cartel to keep the price good or priced efficient for the users of a commodity? You don't have an oil cartel on that side. You have an oil cartel that pushes the price up. But in the silver market, you have the Silver Users Association, which are the biggest users of silver to keep the price, let's say, at an efficient level for their purposes.
Yeah, well,
So
that should be illegal.
yeah, and it's the only commodity that has that, and that's a point very
I didn't know that.
not talked about very much. So yeah, this is important. But I lost the other train of thought when I digressed. You might bring me back, but you can ask me another question.
Well, you were talking about the silver usage, about how tight the market is, and you digressed on that. But I just wanted to talk to you a little bit about
the natural corner. I'm sorry.
Natural corner. Yeah.
So what will happen is the investors will buy up an X amount of silver, and then the users that need the silver will have to buy it, or they're afraid they're going to go out of business. So you'd have, Samsung, Apple, Ford Motor. I mean, these are using electric vehicles. It's using nanotechnology. It's used for water purification. It's used in the new electrics that Cliff Highs talked about, used in fuel cells. And the military battery uses is rather substantial. It's a metal of war. I don't like to say that, but silver is used. It's actually a more efficient metal to use in energy storage than anything else. It's just more costly, but it's more efficient. That's why the mil-spec, the military grade batteries, use zinc oxide silver batteries, because those are what they need. So there's so many uses coming up over the next several years. So what will happen, the natural corner means that users will have to have it or go out of business. And it's really hard to put an edict against speculators when it's these main conglomerates that basically this consortium of corporations that basically run the planet, as far as I'm concerned. I mean, it's, there's Russia, China, all this stuff, but go back to the movie Network. I digress again. And, in that movie, the main character talks about, there is no Russia, China, there's AT&T, IT&T, IBM. It's all these global corporations that are global in scope. I mean, where's McDonald's? Just about everywhere. Where's Starbucks? Just about everywhere. I mean, these global corporations have one thing in mind, and that's profit. They don't care what country they're in. So you would see a need for silver coming from the users. At the same time, investors are scrambling to buy more. That would be a natural corner because they have to have it.
And that would naturally drive, you're saying that all the things are in play to naturally drive the price up. It's just going to be in demand.
Well, you need a catalyst. You're going to need a catalyst. Coming back to Martin Armstrong, I mean, Marty and I don't agree on everything, but I will admit he's one smart guy, and I do agree with him. I don't know that, people buy metals for fear of government failure. So, well, David, that will never happen. It happens all the time through history. Governments do fail. Look at the Roman Empire. And I would say,
Venezuela.
Yeah, that's exactly right. The other point about that with, Argentina, Venezuela, Turkey, we are seeing it, and yet very few people in the United States are awake to the fact that this is a contagion. I mean, this is like the flu spreading across the planet. These people borrowed in dollars and can't pay them back. This is strengthening the dollar temporarily. And I'll make one more very important point. I expect the dollar to get stronger and stronger before the run to gold takes place, because the most important thing for people is safety. What do you think the Venezuelans are doing? What the people in Argentina doing, which the peso just got devalued again today? They run to the United States physical dollars because those are stable relative to their own currencies. But that can only last so long. There's been no fiat that's ever lasted this time. So at some point, this contagion will actually take place in the dollar as well. But until that happens, the dollar will be perceived as a safe haven.
But the wealthy people are... from what I hear, big money is going into gold and silver right now. Little money isn't. I mean, little money should watch big money.
They've moved out of the stock market and they're moving into the precious metals.
They are. Yeah. Your sources say big money is moving into precious metals.
No doubt.
Talk about that.
Well, the way these markets work is there's like undervalued. So they accumulate at an undervalued level and probably tapping the desk again. Then there's what's called the markup, and then there's called distribution. So the smart money does that all the time in all these markets. So what they do is they buy under, priced assets, whatever they are. It's called stocks for now. And then they do the markup and they do the rah-rahs on the financial channels and get everybody interested in the markets.
And it can
higher.
go on for years. It can go on for years.
Oh, yeah. Oh, especially when they're huge markets like we have now. And derivatives, and they can play off each other. I mean, it's just insane what's going on, especially again with the algorithms. But so then now that they've accumulated all this wealth, well, if they sell, 10,000 contracts, it's going to drive the price down, right? Well, we just talked about that at the beginning of the show. So they don't. What do? They distribute, 100 contracts, 50 contracts. So they sneakily get out of their positions at the very high prices to accumulate their wealth. So they accumulate, mark up, and distribute. Well, they're done distributing. They distributed most of their highly priced stocks into the pension funds, fund managers, the general public. And, if you think you don't have exposure because you don't have a brokerage account, but you're working for, the city or the state or something like that, think again, you are exposed to the stock market in a very big way. So they off it to these other, let's say, dumb money, and they move into what's the undervalued asset class, which, of course, has been accumulating the precious metals. Look what Russia and China have been doing, as you said earlier. And then the markup will come on that. And then whether or not that gets distributed or not remains to be determined, because this could be, I won't say would be, but could be a shift where we go back with some type of tie to gold to stabilize the monetary system. But boy, there's some, real wild cards out there. Again, coming back to your main point on we're in an emergency situation right now. So who knows what would take place?
I mean, they're talking about how Argentina, their new guy down there, we won't default. And you're just talking about, the currency, South America, and, crashing. Venezuela's a failed state. Turkey sold $4.5 billion in gold. I mean, they're desperate. There's a whole lot of countries out there, Brazil. Any one of them could throw their hands up in the air and say, we can't pay. I mean, right?
That's right.
And then you want the anti-debt. And the anti-debt is gold and silver in your hand. Am I wrong?
No, you're right. No, that's monetary history 101. I mean, that's basically what happens. And of course, the United States can't pay back its debt either. And everyone knows that. I mean, it's no mystery to China or Russia or any nation state or any economist that's, worth his salt knows it's mathematically impossible to pay it back. Yet everyone pretends like it's actually a safe investment or the safest investment, which is absolutely the opposite of what it is. It's a guaranteed loser. It's just not knowing when the loss will start. And that's the problem, So these people are very happy to trade, interest rate swaps and all these things that go on in the financial markets. And it's really, it's going to end badly. It's just, there's no way that type of overextension in the reality of how the world works can come to a soft landing. We're way beyond that point.
Oh, well, and then add, and I don't want you to talk about this because I've been beating this drum, but it's the big ugly elephant in the room. And Dr. Mark Skidmore, PhD and economist at Michigan State University, identified another 21 trillion additional to the 21 trillion we already owe in the deficit. I mean, to your point, they all know it.
Yeah, I mean, if you take the paper price of gold, there's several ways to do it. I have my method, which I think is the only correct way, but I'm an Austrian. But basically, if you take the money supply and the purported amount of gold held by the U.S. Treasury, which I think is 261 million, you'll come out with about $13,000 an ounce gold. But then
261 million ounces? Wait, stop. 261 million ounces?
Yeah.
Oh, ounces. Okay. And that it equals 8 point something tons. 8,000 tons. 260. Okay, so, and you're saying if you take a look at that and what's your math on it?
About 13,000 an ounce, but if you take the 21 trillion you're talking about, double it, it's $26,000 an ounce.
I mean, we're talking about crazy numbers, but then again, this $21 trillion number, this additional number, is a real number. It's done by a PhD level Michigan State University economist with a team of people based on government reports that they scrubbed off the internet.
Well, think about this. Silver hit 50 intraday one day, okay, but it did hit it in 1980, January 19th, okay? And now, today, as we're doing the interview, the money supply has been increased by 22 times. So if you take 50 and you multiply it by 20, you got 1,000 ounce silver. Now, I'm not saying silver's going to $1,000 an ounce.
But that's the math.
That's the math.
It's just a math problem. What's the math? In other words, what you can say for sure, what is the price target? Who knows? But it's a heck of a lot lower relative to money supply and debt, gold and silver, than what they should be. I mean, that's a statement of fact, right?
Absolutely. And, people talk about you can't eat gold, yada, yada. But, if you were in Venezuela or Argentina or these other emerging markets that are having failing currencies as we speak, you'd be darn glad you had it because you can use it to buy food.
Yeah, people would take it. People would recognize an ounce of silver, an ounce of gold. Well,
Yep.
Gold, you'd have a lot of groceries. But even, right? I mean, I like to have $1,200 worth of dog food. Okay, back the truck up. Anyway, David Morgan, we'll leave it right there. David Morgan, themorganreport.com.